Welcome to this lecture on automation and internal controls in ERP systems. In this session, we'll explore how enterprise resource planning, or ERP systems, strengthen internal controls through automation, integration, and real-time visibility across business processes. An ERP system is a centralized software platform that connects key business functions, finance, procurement, inventory, human resources, and more, into a single system. By automating workflows and integrating data, ERP systems reduce manual errors, enhance efficiency, and improve internal control effectiveness. Let's begin by understanding the relationship between ERP systems and internal controls. Traditionally, organizations relied on manual processes to manage approvals, reconciliations, and reporting. These manual controls were time-consuming and prone to human error. ERP systems automate these processes, embedding control mechanisms directly into daily operations. This automation not only increases accuracy, but also ensures consistency and compliance. There are three main ways ERP systems enhance internal control: automation of routine processes, standardization of data, and real-time monitoring and reporting. 1. Automation eliminates repetitive manual tasks that are vulnerable to error and fraud. For example, in accounts payable, ERP systems can automatically match purchase orders, goods receipts, and supplier invoices before approving payments, a process known as three-way matching. This automated control ensures that payments are only made for authorized and received goods. Similarly, in payroll systems, automated controls calculate wages, taxes, and benefits according to preset rules, reducing the risk of miscalculations or unauthorized changes. In inventory management, automatic reorder points and stock adjustments ensure continuous operations without manual oversight. 2. ERP systems enforce standard operating procedures across departments. By centralizing data and ensuring that everyone uses the same systems and rules, ERP systems prevent inconsistencies and duplication. For instance, a single customer or vendor master file eliminates redundant records and reduces the risk of fraud, such as creating fictitious suppliers. Standardization also strengthens segregation of duties. Role-based access within ERP systems ensures that users only perform activities relevant to their roles. For example, the person who creates a vendor cannot also approve payments, reducing opportunities for collusion or manipulation. ERP systems provide dashboards, analytics, and alerts that help management monitor performance and control compliance in real time. Automated exception reporting identifies anomalies, such as duplicate payments, unusual journal entries, or transactions outside authorization limits, enabling timely corrective action. Let's look at how these automated controls work in practice. In procurement, an ERP workflow might automatically route purchase orders for approval based on predefined thresholds. In finance, system validations prevent journal entries without supporting documentation. In human resources, changes to employee records trigger automatic audit logs, providing a clear trail for accountability. ERP systems also support compliance with laws and standards, such as the Sarbanes-Oxley Act, SOX, by documenting control performance and maintaining audit trails. This evidence is easily accessible for both internal and external auditors, reducing audit preparation time. Another key feature is change management control. ERP systems track all configuration and data changes, including who made them, when, and why. This transparency ensures that unauthorized changes can be detected and reversed promptly. However, automation introduces its own risks. If system configurations are incorrect, controls may not function as intended. For example, if approval thresholds are set too high, unauthorized transactions might bypass review. That's why periodic system reviews and user access audits are essential to maintaining control integrity. Integration with emerging technologies such as artificial intelligence, AI, and robotic process automation, RPA, further enhances ERP control environments. AI algorithms can detect unusual patterns in transactions, while RPA bots can execute repetitive tasks with consistent accuracy. These tools free up human resources for higher-level analysis while reinforcing control reliability. A good example is an organization that uses ERP automation to detect duplicate vendor payments. The system automatically scans invoices for matching vendor names, amounts, and dates. When duplicates are found, payments are flagged for review before processing. This built-in detective control prevents financial losses and improves efficiency. For effective implementation, organizations must align ERP configurations with their internal control framework. This involves identifying key risks, mapping them to system controls, and testing control functionality regularly. Collaboration between finance, operations, and IT teams is critical to ensure that automated controls align with both business objectives and compliance requirements. To summarize, automation within ERP systems strengthens internal controls by reducing manual errors, enforcing consistency, and providing real-time insights. Through automated approvals, access restrictions, and data validations, ERP systems enhance both operational efficiency and control effectiveness. However, maintaining these benefits requires ongoing monitoring, configuration management, and user training. In our next lecture, we'll discuss continuous monitoring and data analytics, exploring how organizations use technology to detect anomalies, manage risks, and continuously improve control performance. Thank you for joining me in this session on automation and internal controls in ERP systems.